Wall Street wants you to believe investing is complicated, that without their expert guidance, you'll fail. But that's a lie worth trillions. Because the truth is, the system isn't designed to make you rich. It's designed to keep you dependent. Today, we'll break down the 3 biggest investment myths that keep ordinary people poor, and the simple truths the wealthy quietly use to win while everyone else plays the wrong game. Meet Daniel. 10 years ago, he started investing the way everyone told him to, buying mutual funds, trusting his advisor, and diversifying across whatever the bank recommended. Every month, he added a little more, believing time and discipline would make him rich. But after a decade, Daniel realized something was off. The market had grown by over 100%, yet his portfolio barely moved. Between management fees, hidden costs, and expert adjustments, he was losing thousands every single year. Then he did something Wall Street never expected. He started learning the truth. He realized the game was never built for him to win. It was built for him to participate while others profited from his confusion. Daniel's story isn't rare. It's the blueprint. And if you've ever invested your money the traditional way, you've probably been playing by the same broken rules. The first myth is the foundation of Wall Street's entire business model: the belief that you need experts to win. They make investing sound complex on purpose, using jargon, data overload, and fear, so you'll pay them to do it for you. But here's the truth. Over 80% of fund managers underperform the market long term. The people managing your money aren't beating the system. They are the system. They profit whether you win or lose. Most financial advisors don't build wealth. They collect fees. A 2% annual management fee might not sound like much, but over 30 years, it can consume nearly half of your returns. That's not advice. That's a quiet siphoning of your future. The wealthy know this. That's why most of them don't try to outsmart the market. They own it. They buy simple, low-cost index funds that track global growth and let compounding do the work. Wall Street sells confusion because clarity doesn't pay them. But you don't need experts, you need discipline. And the moment you stop renting intelligence from others and start trusting the math, you'll realize how much they've been taking from you. The second myth is one of the most dangerous lies in investing: that higher risk automatically means higher reward. It sounds logical, but in reality, it's a trap designed to justify speculation and sell product. Wall Street loves this myth because it keeps you chasing the next hot stock, the next big fund, the next once-in-a-lifetime opportunity. They tell you that if you want big returns, you need to take big risk. But the truth is, smart investors don't chase volatility. They control it. The wealthy don't gamble. They understand asymmetry, how to position themselves so the upside is large and the downside is limited. That's why they buy cash-flowing assets, not hype. They seek predictable growth over flashy bet. Here's the irony. Most people think playing it safe is boring. But the boring strategy, consistent investing, low costs, long-term compounding, is the one that actually builds wealth. The people chasing high reward end up funding it for everyone else. Risk doesn't create reward. Management of risk does. The market punishes emotion and rewards patience. And the biggest risk you can take is thinking you need to take one at all. The third myth is the sacred cow of personal finance: diversification guarantees safety. It's what every advisor tells you: don't put all your eggs in one basket. But here's what they don't say: if you diversify too much, you don't reduce risk, you dilute returns. Diversification was designed for people who don't understand what they own. It's a defense mechanism for ignorance. When you own a little bit of everything, you benefit from nothing. The wealthy don't diversify endlessly. They concentrate intelligently. They pick a few things they understand deeply: real estate, digital assets, businesses, index funds, and double down with conviction. Wall Street, on the other hand, loves over-diversification. Why? Because it keeps your money spread across as many of their products as possible, generating endless fees and zero accountability. True safety doesn't come from owning 100 assets. It comes from knowing 3 that you truly understand. Diversification feels safe, but it often leads to mediocrity. The goal isn't to avoid risk at all costs, it's to know which risks are worth taking. Because the truth is, you can't diversify ignorance. You can only replace it with education. And once you do, your portfolio and your mindset will never be the same. So now you know the truth. The 3 biggest lies Wall Street built its empire on. You need experts, you need risk, and you need endless diversification. These aren't strategies, they're sales pitches. And the longer you believe them, the more money you make for them, not for you. But here's the twist. Escaping the system doesn't mean rejecting it, it means understanding it better than they do. The same rules that keep most people poor can make you free, if you play them consciously. Because once you stop following the myths, you start following the math. And in the next few minutes, I'll show you exactly how the wealthy structure their portfolios. Simple, boring, and unbeatable, without ever paying a cent to Wall Street. Here's the truth. Wealth was never meant to be complicated. Wall Street made it look that way so they could charge you for the map. But once you see behind the curtain, you realize it's simple, and that simplicity is what makes it powerful. You don't need to chase risky bets or trust expensive experts. You need to build a plan based on 3 principles: low cost, high consistency, and long time horizons. That's the formula the wealthy use quietly, while everyone else gets distracted by noise. They don't predict the market. They participate in it. They don't panic when prices fall. They buy more. And they don't measure success in days or months, but in decades. The system profits from your impatience, but the market rewards your discipline. So forget the myth. You don't need permission to invest. You don't need a perfect strategy. You just need to start and keep going when everyone else stops. Because the moment you realize wealth isn't built through genius or luck, but through repetition and restraint, you'll stop chasing advice and start creating freedom. If this video helped you see through the illusion, subscribe right now, because in the next one, I'll break down the exact portfolio structure the top 1% uses to grow quietly while the rest of the world chases trends. The game isn't rigged, it's just hidden in plain sight. And now, you know how to play it.